It's Brian Preston, the money guy.
Now we're going to pivot and talk about the business. And this is where everybody is curious because today, just coincidentally, is the first day that you can apply for the payroll protection program.
Yep.
Now, guys, this is what's wild. This is the one when I have people, how do you get that free 2020 government money? I mean, that's what everybody wants to know.
People just love their free money right now.
Where's that loan that I don't have to pay back? That's the other way this is brought to you. And by the way, this thing is so fluid. If we would have done the show on Tuesday afternoon like we planned and just instead of doing a live stream and released it, we would have looked like knuckleheads releasing this show today because let's just talk about what has happened in the last few days. First of all, the bill said that the interest rate on the payroll protection program was not going to be more than 4%, meaning that it was, so you're thinking, okay, that's still pretty good low interest rate, so it's probably going to be 4%. So I was surprised when the SBA came out a few days ago and said, nope, it's going to be 0.5%. And then the Treasury Secretary said, 0.5%? And he changed it. Now what has come out as of last night is 1%. So the interest rate that's going to be on these loans is going to be 1%. So then next big change. When this legislation was written, it was supposed to have a 10-year, up to 10 years on these loans. Well, then the Treasury Secretary is like, no, not 10 years. This thing will be wiped out. We'll be done with this within 2 years. So they have pulled the 10 years down to 2. And then the other part that I thought was kind of crazy is that, you know, in the bill, it left it open. They said, the SBA is going to clarify this with Treasury. And it's either going to be, we're going to defer payments. Because remember, this is a loan that you're really not going to pay back. It's more like a grant. So we're going to defer payments for a minimum 6 months up to a year. Treasury and SBA came out and said it's going to be 6 months. We think that we're going to have this program done within 6 months. So
point of that being, this thing is changing rapidly. Even this morning, we're seeing changes happening with big financial institutions coming out and saying, oh, well, we're doing this, or, oh, the form changed, or, oh, that.
Yeah, we're on the third version of the form, by the way. If you submitted your application, remember, it didn't go live until this morning. Here's another big thing you need to know. If you're a business, because some people are getting confused by this language, if you're a business with employees, meaning W-2 employees, I'm reading this as you could submit today. If you are if you're self-employed, meaning you're calculating this, you're a gig employee, you can submit next Friday. They wanted to space out employees versus self-employed.
Yep.
So just know those dates. So it's April 3rd is today. And then next week, April 10th, is when self-employed people can file.
You hit that perfect. So the first question that folks are asking is who is actually eligible for the Paycheck Protection Program? And it's right here. It's small businesses or nonprofits, 501c3s, with less than 500 employees. There's some exceptions above 500, but it's less than 500. If you're above that, go do some research. That's who this is really intended for. Or an individual who's self-employed, a sole proprietor or an independent contractor, or others that meet the SBA size standards. That's kind of the exception. So that's who this is going to be a wide swath of businesses that are going to qualify for these loans.
Yeah, and you have to be a business that's around February 15th. Franchise, because they really wanted to help out hotels and restaurants, so franchisees and accommodations, there's some additional stuff in there. But here's the part, and look, I'm just going to go ahead and say it, guys, is that this part of the legislation is approximately $350 billion. This is the part that gets a little gray, and I'm going to go ahead and put it in there. I'm not trying to create a run on the financial institutions because I've been talking to bankers. This is probably, if you own a business, this would be a great planning opportunity for you to benchmark. It's good for my banker to know who I am and it's good for my banker probably to be somebody I can walk down the street and talk to because or just having a great relationship to, because this has turned into a little bit of a madhouse and that people are like, how do I do this? How do I have questions? I don't understand. Should I file ASAP because the money's going to run out? We don't completely know, because I heard somebody who's very connected from DC who was trying to calm down a bunch of bankers. And he was explaining, I think we're going to be fine. I think this will be okay. They're going to make it through the first 350 if they see that we still need money. The Senate, where this all originated, probably does have a mechanism to add more funding to it.
Sure.
But that's not really for sure, because when you look at the actual clarification that came out of the Treasury Department last night.
He's breaking out his sheets now.
I can't help it. Page 2 was, quote, and this is page 2 of what came out from the SBA working with the Treasury. This is just last night. This came out, I don't know, 9 or 10 o'clock our time. So they're working
It's
late.
hot off the press.
But this was quote on page 2: until funds made available for this purpose are exhausted. Well, that's scary. And then on page 13, there's a question because they have a Q&A section, and number M on page 13 of this SBA clarifier is the PPP program first come, first served? The answer? Yes. So all that we don't know. This is gray.
This is the planning opportunity. If you're a business owner, just like in most every other thing out there in the financial world, if you can be organized and diligent and prompt, it probably will serve you well. And I'll just leave it at that. It'll probably serve you well to be organized and diligent and prompt in terms of how you approach the PPP.
So you're probably asking, where do I do this? And it's going to be with your local bank. Some of the national banks, as Bo said, some of them are stepped out and said, we're going to wait a second on this. So here's what you do. You call the bank or email your banker if you have a relationship and just say, hey, are y'all participating in the payroll protection program? Are y'all an SBA 7A provider? And that's going to tell you what you need to know. I'm hopeful because I think that otherwise it's going to look bad if this thing runs out of money really quick.
Agreed.
Especially because on Friday we're waiting for next Friday we'll have self-employed. I just can't imagine that's what the intent of the law is. So let's go a little deeper in this because now since we have an application, we can talk about what's on the application. This is third version, by the way.
We actually have it right here for you. This is the actual application. I think you can actually go get this directly from the...
Yeah, let me give you, because this is all over the phone, all over the internet last night. If you go to treasury.gov/cares, you can see this. I know. I might as well work for the government at this point.
I love it.
But it is, and most banks have links to this too. It's buried. So I found it much easier to go to treasury.gov. That's how you know it's a government website, is when you see that .gov/cares.
If you're like me, you're probably saying, whoa, Brian, that only looks like it's 2 pages. That looks like this must be a pretty simple application. There must not be a whole lot to this thing.
It's a little deceiving because there's several things I want to draw your attention to. I think the first page, not much going on there, except for it says, hey, just give me your number for what it is. But there's a lot more, and I'm going to explain what that lot more is. But before I get into page 1, let's talk about page 2, because there's the big part. This is where on the first page, there are some initials. You'll have to initial, basically saying you're not a crook, you're not under felony investigation, and that people... all your employees work here in the United States. They want to make sure this is going to benefit employees here in the United States. But page 2 is where all the certifications. This is where they're going to make you say, are you applying for this because of the uncertainty? Is this something, are you going to use these proceeds to retain workers and maintain, and payroll, mortgages? And then, it's all the assertions you're making. And then it scares the heck out of you because it's going to say, initial here, understanding that if you fib on this, you're going to be subject to, to all kind of penalties and repercussions. They're going to put you, in some place you don't want to be. So, and look, here's the reason why this is such a big deal. They wrote in the bill that banks, because look, banks are scared. The reason you're finding out some of these big banks are going to wait a second before they participate, you have to realize in 2008, the crisis, there was a lot of shotgun marriages. And some of the banks didn't know, because the Treasury Secretary at the time pulled them all into a room and made them agree to certain things. And then after they came out of the room and when laws started getting enacted, the banks felt like they got treated a little rough in that situation. So a few of them are a little nervous this time. Hey, fool me once, I'm not going to be fooled again on the whole process. So that's why they're hitting the pause button. But I will tell you, all in the legislation, all in the SBA clarifications is they are saying, look, no, we truthfully are going to backstop this money financially. And all we're asking you to do is do some basic due diligence. We'll give you the documents they're going to ask you for. But then ultimately it falls on the borrower to assert what they did and didn't do. So that's why the banks are kind of going to probably be more on your side. They're going to want to do a good job because my banker is doing I've already had to update the applications. I've had to send additional documents. They're going to do a good job because that's what bankers do. But it does fall on you, the borrower, to make sure you meet all the conditions.
One thing that I noticed as I was reading through the attestations and kind of thinking through them, there's a lot of talk about double dipping because I do think one of the things they want to be very careful of is that you don't have single businesses getting money from a bunch of different sources. So one of the things you'd have to talk about is, do you have any other SBA loans out there? Are you taking advantage of the EIDL, like the disaster piece? Are you doing these other things? Because it will affect your eligibility for PPP. So just know, if you've already started a process somewhere else moving in one direction, it could very well affect the application you're going to do if you're going to try to take advantage of the payroll protection
Well,
plan.
and there's been a lot of curveballs on the whole independent contractors. And I think it's still, even though they clarify in this, that what came out yesterday from the SBA, that independent contractors, on the short answer, it says no, you don't get to count independent contractors. But then if you read the verbiage, it's still a lot of grayness in there. And I think it goes to what you said. Bo, and you had the perfect example when you and I were nerding out on this, is that dependence on tax returns. Why is that such an important thing? Is because typically when you claim a dependent, there's education credits, there's child tax credits, there's all kind of credits, and they want to ensure, the government wants to ensure there's no double dipping. They don't want two parents claiming the same kid. The same thing is going on here. They don't want, in the clarification on like independent contractors, they don't want you claiming an independent contractor who then is next Friday go file their own payroll protection program and then claim it. So that's why they're trying to ensure there's not a double dip format, because you don't get to claim somebody and then they claim themselves. That's two times. That's not the intent of this thing. So be careful with, and think about it in those terms, because I think a lot of times taxes are common sense if you'll think about what the intent of the government was. They're trying to get money in the hands of employers so they can keep people working. So let's go into what's counted as payroll costs.
That's the thing that we keep seeing people ask, and I see this all through the thread, is what counts? How do I calculate? What counts? How do I calculate? Well, this is the guidance they've issued. These are the things that are included and excluded in terms of payroll costs. So on the included side, salaries, wages, commissions, tips, vacation, parental, family, medical, or sick leave, allowance for dismissal or separation, payment for group health care benefits, including insurance premiums, payment on any retirement benefit, and then payment of state or local taxes assessed on the compensation of the employee. Those are the things that they include in terms of your payroll costs. When you go to fill out the thing, it's going to ask you, hey, what are your payroll costs? How do you calculate that? The stuff that they exclude from those costs are compensation in excess of $100,000 as prorated from 2/15 to 6/30 of 2020. So if you have folks making over $100,000 a year, you can't include the compensation of the amount over $100,000. You can't include payroll taxes, railroad retirement taxes, or income taxes, compensation of employees whose primary residence is not in the U.S., or qualified sick leave for which a credit is allowed under the Families First Coronavirus Response Act. Again, no double dipping. If you're getting a credit somewhere else, you can't count that towards your payroll expense for the PPP.
So let me make this simple for you guys. Here's what the government's intent was, because like I said, follow the intent and usually you'll be on pretty stable ground. They want you to add up all the compensation for your employees. So that means that they want you to add, it's gross compensation for the employee. If you do an employer match in your retirement plan, add that to it. If you pay for health insurance for your employees, add that to it. You know, it's all those type of things. If your employee has state taxes or some type of local taxes that are withheld, gross it up. They're really trying to gross up so your employees are coming out ahead. You, the employer, and the employees are going to make it through this bridge period. So that's really what the intent is. What do you pay your people? Gross it up for benefits of health insurance, retirement plans, and some of the taxation stuff. And that's really what they want. And for all you people, you're trying to figure out, well, I'm a K-1 income. I don't know. But listen, guys. If you make, because I was having this conversation yesterday with one of the associates here. Every year, the government posts what your maximum compensation is, but they'll let you count towards retirement plans. And I think it's $265 for 2020, $260,000 for 2019. I might be off just a little bit.
I think it's $285. I think it's somewhere around that.
That seems a little hot, but it's somewhere in that mid 200 range that they shut you off anyway. This is kind of working the same way. Is that if you're a person, you're an LLC or you're, but you have employees and you make $300,000 a year, they're going to shut you off after $100,000. You can count the compensation from 0 to 100, but don't put more than that on this thing. That's why it's considered excluded, is you can show it on the included, but then usually you got to back out the excluded. They want you to net that number down. So you're grossing up your employees' wages, not counting anybody who makes the portion over $100,000. And then they're just looking for a number. It's a very easy number once you get through all the math, but it's going to take a lot of math to kind of figure out what it is. The other thing is you're trying to figure out average employees, because it's going to ask you how many employees on the application. Here's the guidance we saw. I think every month you look at let's take it from March 1st of 2019. How many? Just March 1st through March 31st. How many employees were working at your company? That's your number for March. Do the same thing for April. Do the same thing for May. And then add up all the employees that you had for each month, because there's going to be some slight variations. Maybe you hired somebody. Maybe somebody got late. Somebody resigned and went somewhere else. Add up each of those months, divided by 12. That will tell you how your average employees, and that's going to come into play later on figuring out if you still have the same number of employees on the forgiveness part. But we want to tell you how to work on the application. The big things they're going to want to know is what is that number for payroll. You can do 2.5 times that, or 250%, and then they're going to know how many FTE employees you have. Do the average for each of those months, and you'll be on good, solid ground, I believe.
Okay, so it's pretty straightforward, Brian. I fill out this 2-page application. I put my number on there and just send it in, right? That's all I have to do. That's all it takes.
No, that's when the fun starts with the paperwork. And we've actually been talking to people about this, sending out emails. Banks have been very proactive on sending out emails too, because they don't want to be caught off guard. The first thing I'm going to ask you for is a 2019 tax return for your business. Well, guess what? Most of us haven't done a 2019. Well, because all this craziness happened. Maybe you did, but a lot of you might have extended your business tax return. That's perfectly fine. They'll then say, they put a provision in there that said, if you don't have your 2019 taxes completely done, just provide us a 2019 profit and loss statement and a balance sheet. So at a minimum, you're going to need to put that stuff in there. You're also, and of course, because this is all built on payroll, they're going to want to see all your payroll documentation to confirm what you have. So your 940s, your 941s, your summation, your W-3 of all the W-2 totals that you had for 2019. They're probably going to want to see all of that stuff so that you can make sure that, what you've done. I know when I was helping somebody compile this, I showed them the health insurance premiums that the employer was making. All the things that you could possibly think that you're including in the gross up, give them a paper trail. This is, look, I'm going to give you some clues from a former CPA that worked in tax as well as audit. Don't assume somebody knows where you got a number from. Create a paper trail. Put the breadcrumbs out so if you're the bank official, you're not having to call you back up. And this is great advice that'll serve you in the long term on your tax preparation too. Don't just assume your banker is a psychic. You need to create a paper trail so that way if you ever got questioned on this, remember you are signing all this stuff is legit, all this stuff is right, because you, the borrower, could go to jail and pay a fine. Not the banker. The banker has a hold harmless clause. You could go to jail. So that's why I'd create a very good paper trail. And then it keeps going. Healthcare benefits. Retirement, so you're going, most of you guys, if you're doing a 401k, you upload a monthly report to your payroll processing and retirement provider with everybody's wages, what the match is, how it's all going in. All that stuff is good documentation to create a paper trail. And then I would also, they're going to want to know the governing documents. I'm totally screwing this up, but that's your letters of incorporation, your operating agreement, all the things that show that you're legit, as well as the ownership of the company. All that's going to come into play.
I think you said it perfectly, Brian. If you're putting a number on page 1, you should include with it documentation that justifies it in the additional information you provide. And you'd like for it to be all-encompassing enough they don't have to reach back out and slow down your application.
Now, I do want to say this because I know we're about to flip the script, and we're going to talk about how we make this essentially a free loan that's not taxable. But I want to remember, there's 2 phases of this process. You first have to qualify for the Payroll Protection Program, which, remember, this is to get money in your pockets to cover payroll, and it's 250% of your average monthly payroll. That's component 1. So everything I just talked about was How do you get the loan? How do you know how much the loan is? But that's the first phase, and that's where you make it through that step. Now we get to phase 2. After you get, because your bank will submit this directly to the SBA. And by the way, bank puts up the money, not the SBA. Bank puts up the money. They will then, once the SBA gets a loan number issued to you, you're kind of in the queue at that point, and you'll work out a deal with the bank at that point. And then 8 weeks in the future, or probably 2 to 3 months in the future, now we're going to talk about how do we make this loan forgivable, tax-free, and that's where other components are going to come into play.
Yeah, the question you have to answer when it comes to loan forgiveness ultimately is, what was the money spent on? And so they give us a few things or a few categories on which these loan dollars can be spent on that would result in the loan being forgiven 100%.
Now, realize, this is called the Payroll Protection Program. There's a reason I say it like that, is because this came right after the table of contents of the entire CARES Act. This is super important. That's why 75% of your forgivable amount has to be for payroll. Now, remember, it is the same definition of payroll that I used on the 250% number. You do get to gross this up for all the things we talked about with the health insurance, the retirement, but it is going to be payroll cost needs to be the lion's share, or 3/4 of what this is going, if it's going to be forgivable. You also do get to add in there, because look, we're worried about hospitality industry because they're shut down in a lot of ways. So you do get to add additional wages for tips. Then this is where mortgage interest and rent for that 8-week period, or 2 months essentially, comes into play. And it has to be whatever your rent was as of February, before February 15th. I mean, Bo, you and I are perfect case studies. We just took down brand new office space in the same building starting April 1st.
What a time to add office space.
Wow. You want to talk about uncertainty. Talk about goosing your rent payment for people you don't even have working for you yet, and then the market completely goes into the toilet. I mean, it's just, there's a lot of scary stuff going on out there, but so we don't get to count this new office space.
Right.
We only get to count the office space that we had before February 15th. So that's important stuff. And utility payments. By the way, they're very liberal with the utility payments. It's not only electricity, it's not only gas, it's also your telephone, it's your internet. Very liberal with that whole process, because they're trying to help. It's supposed to be a bridge to get you through this period where they're essentially paying us all not to work.
So, okay, so what are the things, so this is what does count towards forgiveness, Brian. What are some of the things that would happen that would cause my loan to not be forgiven? What are some of the things I need to be careful of as I do begin to use these dollars?
Now, and I'm going to try to keep because you can get lost in the math equations that everybody's trying to help, but it's just confusing people, I think, in a way. That's why I was trying to tell you the easy way to calculate what your FTE number is going to be on the application. But then the government's going to look and they're going to say, okay, now that we've made it through the application, now that you've made it through the process, during this 8-week period that we're looking at, what is your FTE number now? If it is the same or greater than it was during your average period, they're not going to reduce your forgiveness. It's going to, whatever you calculated out on your forgiveness, it's going to work up to the full amount. You can't go above the amount, but it is going to be up to that, so you won't have a reduction. But if you did drop, let's just say you had 10 employees. Now it's 9 employees. There is a chance that they're going to cut your benefit 10% because that's a direct, that you had a reduction in force in the Treasury's eyes and the SBA's eyes. So taking that out. The other part is did you give people pay cuts? If people who make less than $100,000, if their compensation went down, that will have a direct impact on, how much of this is forgiven. So the two big things, if I could boil this down to simple things to understand, if you got the same number of people or more, you're fine. And if you didn't give pay cuts, you're going to be fine. If you reduce people or you cut their pay, there could be a reduction.
Now, there is an opportunity, right? So the government recognized a lot of business owners try to be forward thinking. They saw this coming and stuff started to, they might have done a very quick reduction in force to try to stabilize the business. If you did let people go between February 15th and around the end of April, right? So if that's kind of the window that you let people go, there is a chance if you hire them back before June 30th, you can boost your numbers back up. You can get your average back up and not have part of that loan not forgiven because of that.
So that's why we're saying if you were sitting at home right now watching the live stream and you're like, man, I got laid off, call your employer, make sure he understands about this. Now,
Yep.
let's hope that there's money. I'm hoping that the source I heard it from, that they keep funding this thing beyond the $350 billion, but it is something for your employer to definitely consider.